we have two trading platform in exchange. We have a spot trading and we have derivative trading. So right now, as you can see, when I click on this trading, you understand my point. So look at what is going on. So this platform right here that you are seeing right now, it's just like you are trading the present contract. You understand? Like you are buying low and you are selling high. You understand my point? For example, now Bitcoin is around 28,160. Let's say 160. You understand? So now I might decide to say, okay, I want to buy Bitcoin at this level. You understand? And when Bitcoin moves to 29,000, I will sell. So that means you are buying low. You understand? And you are selling high. So now if I want to buy Bitcoin at this 28,200, let's say 200, I'll just click on buy. And at this point, you can see it's going to bring it down here. So you want to specify how much Bitcoin you want to buy, whether you want to buy 1 Bitcoin, and it's going to worth this USDT. But I don't have up to this USDT. You can as well buy a portion, which is, I think this 24. You can buy in percentage. You understand? So you will need 0.64 USDT, which I have. You understand? You understand what I'm trying to say? So, but we are not going to buy this. But this is how this actually works. You understand? So now let's say Bitcoin is dropping. You want to sell. You understand? Because you don't want to lose money.
All right.
You understand? You've already buy Bitcoin at lower level. You understand? Yeah. So Bitcoin has already rise to some certain level. You understand? You know, when Bitcoins drop in price, you want to sell it fast so that you don't start losing money again. Yes. So you just click on sell. You understand? Or when you buy it and you see that you're already in profit, you click on sell. So this is just called a spot trade. Like you are trading the present contract. You understand? You are trading a market order position of contract. In this scenario, it's all about you want to buy low and sell high at instant. You understand? Because you are seeing that Bitcoin is going up, so I want to buy it at that certain level. When it move up, I'll sell it and take my profit instantly. So this is just spot trade. But the other one right here, which is called derivative, these have a lot of information which you need to know, and I'm going to be explaining it step by step to the fact that you don't even need any video. You don't need to even watch any video to understand how to use any crypto trading exchange platform. So right now, as you can see, we have this derivative. Some people always talks about this derivative trading like it's meant for professional trader, and they are not lying, because if you doesn't know how this platform or any crypto platform actually works, you're gonna be losing a lot of money. You understand? That is why they always say that you have to familiar with this trading, spot trading. You understand? Because this one, you are not losing anything. You understand? You only buy when it is low and sell when it is high. And even if you miss when you're supposed to sell it and the price has already dropped, you have to wait again, the price will go up again. But when you are trading derivative, anytime it drop, you lose your money. You understand? So this one right here is called future trading. You understand? You are not trading the current contract. You understand? It's not like you are predicting or betting that Bitcoin price is going to be going down in futures. You understand what I'm trying to say? It's not, you are not trading the current contract, you are trading the future. Okay, look at, let's say this is the chart right here. As you can see, the price is actually going up. You understand? So in trading, you are not predicting, you are reacting. When you started predicting in market, you understand, you will lose. You don't used to predict market, you react to it. Like now, I'm seeing Bitcoin going up. I can say, okay, Bitcoin will go up. Let's see, maybe. You see, let's see, maybe. That is why your technical analysis, your fundamental analysis, and sentiment analysis is very important before you start trading future trading, which is derivative. You understand what I'm trying to say? Like now, look at the price is actually like going up, growing back. So I can say, okay, I want to enter the market right here, and in future that the price will go up. You understand? Yeah. So immediately the price go up, I'm in profit already. You understand? Yeah. That is the difference between the spot trade and the future trade. Yeah. The spot trade will allow you to buy at low and sell at high. Even though if you miss at that certain level that you're supposed to sell, that you run loss, but you have to hold that contract. Then when you hold it, and when time comes again to go up, hope you understand. I want to make this very simple so you don't need to even watch any video again. You understand? But in derivative trading, which is future trading, you are not holding that contract. You understand? You are not holding it. You are just proposing that, okay, this thing it will go up. So if it does not go up according to your plan, you are losing all your money. You understand? So that is the main reason why a lot of professionals always tell you that if you are a beginner, you shouldn't jump into future trading. But for me, I think there's nothing in the future trading. Only what you need is just to understand the risk behind it, the risk management, you understand, and understand how the platform that you're using is actually working. You have to understand, when am I going to be liquidated out of the market? When am I going to be setting my stop loss so it will minimize my risk? You understand, when I'm taking a trade, and as well, how can I be taking my profit at instant when I'm seeing that, okay, I'm already in profit? How can I start taking profit at instant? You understand, when I move 2 pip, I want to take 50% of my profit. When I move at 30 pip, I want to move. You understand what I'm trying to say? That is the basic of what you need to know when you are trading future, which is derivative trading. So that's what all about the derivative. The derivative is just like you are not holding the contract. You understand? You are proposing that, okay, that is why you are not predicting. You are proposing that the price will go up at certain level. You understand? So in some exchange, they used to use quarterly, that like the contract is going to be expiring. You understand? But I don't want to like boggle you with all of that. You understand? So that you won't get confused. But that's why I choose this platform, because the platform will only give you contract that you can hold, that it cannot be expired. You understand? Like this ETC and USD bar, this one is just a contract that cannot be expired. You understand what I'm trying to say? It's not a quarterly that you're going to be timing you that if the price doesn't go up at the certain level at the time that you are proposing bar, the contract will just close up, whether you lose or you are at gain. You understand? But now on this platform will only give you a unexpiring contract to trade. You understand what I'm trying to say? So now that is all about the derivative.